And thank you for being here with us today. We appreciate your time. And before we begin, I just wanted to set a tone for how we designed this session and what it means to us. We meant this to be a conversation, and we intentionally kept this a very small group, and we never broadly marketed this event because we want this to be interactive, we want this to be focused, and we want to, for these attendees, we want this to be genuinely useful. We are happy to take your questions. We reserved time for questions in this discussion, and we really want this to be a dialogue rather than a lecture from us, right? For those of you who would like to explore working with us after this session or learning more about Climatic, we are very happy to schedule one-on-one follow-ups with you. I'll send a follow-up email after the session, and we just reply to the email, and we are happy to set one-on-ones with you. And now I'm happy to see more people joining in and want to zoom out a little bit for a moment and frame why this conversation matters today. What we've seen in the past 5 years is that climate technologies have crossed an important threshold, right? What used to be viewed as like experimental, more dependent on subsidies, is now increasingly becoming an infrastructure grade and commercially deployable. And especially we see this in hydrogen, ammonia, waste to energy systems that are no longer pilot concepts, but instead they're operating at commercial scale across multiple geographies. In many cases, competing directly with incumbent fossil systems. So today's discussion will not be about theory or climate theory, but more like actual capital and yields and what do we do to mitigate risks. And especially, I think the most importantly is about timing and why now is the right time to look into this, right? And before we dive into our discussion, let me quickly introduce who is joining us on this intimate panel that we will have today. And I'll then invite each of them to share their own story and just present themselves. We have Michael Planner. Hi, Michael. He's a founder of Climatic, a longtime entrepreneur and has a lot of experience in taking complex tech from concept into a real deployment. We have Mark Vizina. Hi, Mark. Mark is CEO, and he is decades of experience in investment banking, and he's a senior advisor and has huge experience in structuring and financing growth stage and early stage and growth stage companies. And we have Todd Gimbel. Hi, Todd. Global head of public affairs with deep experience across government, regulation, sustainability, large-scale infrastructure programs internationally. And I'd love to hear directly from you, especially what pulled you into climate tech, if you can give us a brief background of each one of you. Mike, let's start with you, please.
Sure. I'll make it brief. I'm keen to for us to get into the Q&A, but the reality, the reason I'm sitting here is I've worked for about a decade in the scale up space, helping youngish kind of companies grow, scale, get funded, get their governance together, all these kind of lovely disciplines that is usually part of growing a business. And I had a dip into climate technologies, which was probably before we had COVID, which now seems like decades ago. And then I came back to it in 2023 and realized, oh, this is now fully commercial. And that, through a long set of events, which is going to take us too long to go through here, but basically led to the creation of Climatic, led us to kind of ramp up a global ecosystem to basically deploy climate technologies, as we call it, on the ground, in the ground, and above the ground. So that's sort of what I bring into the conversation is very much this intersectionality between impacting the climate, but also impacting the bottom line in a good and healthy way.
Thank you. Mark, please.
Nice to meet you all, Mark Vizina. My background is more on the financial structuring, investment banking, operational side of things. Although I've had some exposure to ESG type investments and whatnot early on in my career. But I met Mike about a year ago and got quite interested in what he was doing. And what really interests me was more the timing of this and where we're at, and Mike will go into more detail about how we have built up to this, and it's been many years that Mike has been thinking about this and just looking for the right time to bring this to market. And I think this is exactly the right time, where not only these great technologies are out there, but they're at a substantial efficiency level to the current solutions being deployed. So from my standpoint, globally, I bring more operational, financial structuring, and banking support to the organization, and just very excited to be part of it. So thanks, Maria.
Thank you. Todd?
Hey there, my name's Todd Gimbel, coming to you from Los Angeles. I'm a lawyer by training. Please don't hold that against me. I have been out of the practice for a very long time. Moved into public affairs, government relations, and corporate affairs. Had about a 35-year career with many big companies, from Kraft Foods to Miller Brewing to Altria to Levi Strauss to Citibank, and finished up my corporate career with Herbalife Nutrition. Early part of my career was here in the US, but in the early 2000s, I moved to Singapore with Kraft Foods for a couple of years to build up their public affairs in Asia. And I stayed for 13 years and ended up working for Levi's and then Citibank and then Herbalife. Came back here to the US about 6 years ago with Herbalife to be their global head of public affairs, and also then took on the de facto head of sustainability there. And I got the experience of building an ESG program for Herbalife, which is about a $5 or $6 billion company from scratch. We built an amazing program and rolled it out. I left there about 4 years ago and have been working since with several startups, mostly somehow with a sustainability angle. I've known Mark now for about 4 or 5 years, and Mark introduced me to Mike, and it's been, gosh, maybe almost a year already, or maybe a little less, but it's been amazing kind of seeing what Mike has envisioned for climatic and where we're going to take this, and very exciting to me. So I'm signed on to try to get us where we need to go.
Thank you, Todd. And just quick background about me. I'm again Marita Ganabashvili. I'm based in Boston. I've been actively involved in Boston climate ecosystem, especially through Greentown Labs, which was my previous role, where I had privilege to see hundreds of early stage climate tech companies and startups. And the reason I'm very excited about Climatic is because it is a next level or next step for this climate tech in general to be at this stage when we already can deploy, when we can scale and have an actual impact, a real world impact. So very excited about it. And actually, this is a good segue to say just one sentence about Climatic. We focus specifically on rapid deployment of scalable infrastructure assets and structuring and deploying projects designed to generate real economy returns. And this would be my first question to Mike to explore and elaborate a little bit on, has climate tech matured enough to be a true infrastructure asset class?
Well, that's almost like a loaded question, and I mean the short answer is yes. the longer answer is how did we get there is the reality of the technologies which I've been following, as I said, since about 2019. And we see technologies now that are new or novel, but are getting into production or are in production that produce results that are 20, 30, 40% better on the operating side. And many of these things have half the capex. So when you look at infrastructure where capex is traditionally a big component, big part of the cost that you amortize over, let's say, 20 years or 25 years, whatever long the machine lasts, then that's really shifted the balance to a lot of these newer technologies. And what that means is that some of the or all of the installations that, for example, we've been talking to off-takers about in the last year, 2 years, is they will actually produce at less cost. There is a less or smaller capex than if they were doing, if you will, the old-fashioned technologies. Oh, and by the way, it's completely green. And it's like, and I'm saying that a little bit sort of cheekily, but yes, we are here because we want to see an impact on the climate, but we are also here because we believe that it's really only going to take full effect when there's actually an economic incentive to shift to other technologies that are green, that are clean, that have less emissions or no emissions. So when I say does it work financially, it's like every project that I've got in my spreadsheets right now have double-digit returns, and that's a good starting point. In infrastructure, I don't know if any one of you guys are in infrastructure at the moment, but it's a lot of it, unfortunately, doesn't generate double-digit returns. It's much less than that if you're in traditional airports or bridges or power plants or whatever not. And because these things are leveraged, then there's a very significant upside for the right investor.
Thank you. And I think that a mention of double-digit returns brings us to the next question, which is if the projects now stand on their own economics, what would be returns? And Mark, maybe you can talk us through what are the standard yields today and how are these yields changing with the new technology?
Sorry, I had to get off mute. Yeah, so this is one of the things that really intrigued me, right? When I first got involved with Mike, one of the things I was thinking of was, just based on my experience in infrastructure, that it was going to be sort of this low return environment, maybe slow and steady kind of thing. But what we quickly found out was the way we're structuring these projects, a typical infrastructure project, and this is being very broad, is going to be in the sort of very low single to mid single digits at best, and with maybe a few exceptions. So for those traditional infrastructure technologies, but what Mike and I came up with, and he's done a lot of work around, what the modeling should be, and I've challenged him many times in terms of taking a conservative stance on this, and even with that conservative stance, we still saw very solid high single digit returns for this type of structure that we put together. So just incredibly excited about the way we're packaging this up, the technologies that we've embraced, and we continue to not be bound by any one technology or another. The world is really our oyster in terms of the opportunities that are out there to continue to look for the best, and that can bring to our clients. But big difference. Thinking like something 3 to 5 to 6% traditional infrastructure returns. We're targeting 20% plus yields. Some projects will be less, some projects will be more, but that's we've gone through this modeling a lot. Mike and I have spent a lot of time talking about it, and that's what we think we can deliver to our investors.
Thank you. And my next question would be for Todd to cover all the aspects of what we want to cover today, and then we will go deeper into all of these subjects. But next question would be, what is happening globally. So we have technology, we have the ways to flow capital in this technology, and what is happening across the nations globally. What does the demand look like? And we've seen some patterns in these past few years, which were very interesting to me when I heard about it, especially from interest from sovereign governments. And I would love to hear like what we've seen in terms of market readiness and yeah, the demand side.
Sure. Thanks, Marita. Well, I'll start off by saying that, the global geopolitical situation with regarding climate is crazy. I mean, you've got countries like the US that are basically dismantling everything that was put into place. And on the other end of the spectrum, you have, countries like Denmark and Sweden and UK that have really aggressive greenhouse gas reduction targets. You've got developing countries that are looking at, hey, what are we going to be able to do to move forward in our development by bringing in these technologies and also potentially gaining some energy independence. As you know, countries are reliant on others for energy and for the removal of waste, and pretty much every country, most countries are saying, hey, how can we implement these new climate tech in our country in order to kind of free us from the grid a little bit, in order to allow us to go, do waste to energy. We've all got a lot of waste, and especially smaller and island nations that have to kind of ship everything out or rely on other countries for all of their energy. Again, it just makes great sense right now for sovereign nations to do everything they can to try to be at least neutral so that they don't have to rely on others for their energy, and maybe even move to a point where they can implement new technologies that they can export some of it out of their countries. So that's kind of the basics of what the globe looks like right now. Out of all of this craziness comes a need and a desire for countries to say, we need to figure this out ourselves, and let's go with new technologies that are energy efficient, that bring something to the table, that use what we already have here in our country to generate power and hydrogen and waste energy, et cetera, as opposed to relying on others.
Thank you.
Can
And
I add a bit of something to
of course,
Todd's commentary? I think what is important to see here is that, I mean, this has surprised me, which is why I'm bringing it up. It's probably not, it's not obvious, but let's say that you are a small territory, you're an island. We are at the moment just like a couple of days away from getting a go ahead in for an island. It's got a couple of thousand people. It's in a part of the world that is amongst the wealthiest in the world, so it's not like they're lack of money. On the other hand, yesterday I spoke to leaders, tribal leaders in one of the Pacific Islands, and you know what? It's exactly the same problems. It's exactly the like, how do we deal with the waste? How do we become energy independent so we don't need to wait for that bunker ship with oil? How do we clean up our beaches from plastic pollution? I can carry on, but this is a long list. But it's actually the same problems that we see, whether it's a super low GDP kind of country, GDP per capita, or it's a super high GDP per capita country. It's actually the same solutions, and which is surprising to me because you tend to think, oh, they're this kind of, they falls into bracket, it falls, and I mean, we've been requested by, shall we call them, a large North African country to basically say, well, could you deploy dun, 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 same kind of systems as we're looking to deploy elsewhere? And we now have a formal, I think Todd would call it a diplomatic engagement. I'm not the most diplomatic kind of person, but apparently we have now done the right thing and sent a proper letter to the dear minister and all that kind of stuff. But the reality is that these things are universally applicable across a broad sector of industries and across a broad swath of different countries.
Thank you, Mike. Um, I want to take a pause here just to make sure that we take time to take questions from the audience. I obviously have some questions prepared for us to move forward, but just wanted to open the floor in case someone wants to ask questions now, or we can go ahead and explore through my questions, which are also nice questions, but wanted to ask if anyone wants to jump in and ask anything. Please feel free to unmute.
Mike,
Yeah.
I have a quick question. Do
please.
you with the U.S. shifting away or leaning away, I'll say, from ESG focus, and I agree. I see other countries that are leaning in more so for ESG type of requirements and focus as well. But at the end of the day, right, a lot of the investor capital and a lot of the innovation and the technology is going to be coming from the U.S., right? So how do you account for that misalignment? Does that mean that the technologies have to go global, like you said in North Africa, just to grow because of the backlash here in the U.S.? Is that what you guys are seeing?
I mean, I'll take a first crack at that as a public affairs guy. Look, the fact that ESG per se has kind of gone out of fashion in the US, I've seen firsthand from being inside of big companies that doesn't mean that all of the aspects of it are going away. They're actually just not calling it ESG as much anymore. But I think the big point is that every, whether it's a country or a big company or a state or anywhere in the world, including the US, if there's the ability to bring in clean and green technologies at a cost that is competitive with the current technologies or even better, you know, everyone's going to want to do that because they still have a desire to say, not only is this economically great for us, but it's also green. And I think that even holds in the US. I think a lot of the as you mentioned, a lot of the innovation may come from here, but like Mike is bringing to the table a bunch of things that were mostly innovated outside of the U.S., but will probably apply wonderfully in the U.S. So my point is, look, in the old days when doing ESG and doing green stuff cost, 50% more than doing it the traditional way, that's not going to happen anywhere anymore, I don't think. But now that these technologies have come to a point where they're competitive and maybe even superior in investment and return to the old stuff, it's gonna go on like wildfire. Mike, maybe you can jump onto that one.
Well, I think it's a very interesting question you raised, Mike. I think we see there is definitely a divergence. There is surprisingly, as Todd just hinted at, there is an underrepresentation of technology from the US on a global scale. We see very few at the forefront of anything technologies from the US at the moment, and it's not for lack of looking. I've spoken to about 110 companies in the past 2 years. It's not like we haven't been out there. There is, however, a very large proportion of capital available from the US with a green, sustainable, SDG related, or otherwise kind of angle to it, coming from endowments, coming from pension funds, coming from a whole lot of things, and is definitely stacking up against what's coming out of Europe, because Europe is an extremely large capital provider in this kind of space. But what's interesting is the projects, in other words, where does this get deployed is global. I mean, I wouldn't actually pull one country above the other. Yes, there's places like, say, Denmark, they may be further ahead, but that's just because they started sooner. It's not because they ran faster, and I mean, I'm Danish by background, so I can say it's without offending anyone except myself. But it's like, they just been at it since I was a child, right? And it's just like, and that's a long time ago. But yeah, there is definitely a divergence open up, and I think it will be interesting to see what the next 5 years bring.
And if
Well,
I
Mm.
could
what's your
just add
view on it,
one
Mike?
point.
I'm curious to hear as well.
Yeah, if I could just add a little bit to that, just in terms of my observations, working with Mike, we've been in, and I know this is a cliche, and we've never intentionally did this, but we've been kind of in stealth mode here the last 6, 8 months, and as we've sort of built this thing out, and without anybody even knowing who we are, we've built a $500 million pipeline, mainly thanks to Mike to this point, and a lot of debt around that to support these projects. And there's just and it's all coming from outside the U.S. at this point. Well, on the debt side, we do have some things going on in the U.S., but in terms of the deployments, most of these have happened outside the U.S. And there's what we can see is there's just incredible demand beyond that, so that if we get into these situations or periods of time, if you will, where the political climate may not be as in favor for the U.S. to deploy these projects, that there is just plenty, more than we can handle, of opportunities around the world. I take that one step further, specifically in the area of AI data centers. I think these solutions have to be considered. There just isn't enough electricity and grid deployment to handle the plans that are in place to put these data centers into operation. And so there'll be these ebbs and flows, I think, from a political climate standpoint, and certainly that's more Todd's area. But I can tell you from my short experience here, there's just an endless amount of opportunity, I think, around the globe, that we don't have to worry about a specific country being in, or a country like U.S., if you will, that's a big player, having a major impact.
Okay, perfect. Thank you.
Cool.
Thank Yeah,
Anyone else?
yeah. I can ask you a follow-up question, and then we can discuss more, because I think it will make a lot of sense for our attendees to learn a bit more about how climatic is different, or what we are actually trying to build, and then we will have more context to it, right? And um, I framed this question from my perspective, like personal point of view, because I like at first when I hear about infrastructure projects, right, I picture this multi-year mega projects, and that need a lot of capital, a lot of capex from companies to deploy. And it was very intriguing for me to first realize how climatic is different, and taking the different approach to it. And please, Michael, elaborate a little bit on what does it mean to be working with like modular, rapidly deployable infrastructure that actually works in practice, and how do you envision how long it takes? How is it different from anything else that we've seen so far in climate deployment and infrastructure?
Well, let me offer a tweaking of the lens. We didn't invent modular infrastructure or scalable infrastructure. Instead, we went the other way and said, well, what we're looking for from companies that are developing technologies, it's got to fit into I was saying is, if it doesn't fit into a 40-foot container, it's not us. Now, that's obviously a bit of an oversimplification, but the reality is this, and this comes from both in economic development, but also from a climate tech impact. So if we take the economic side first, if I say to any one of you, infrastructure project, and that term, what are most of us thinking about? Well, I know what I'm thinking about is we're thinking about big cranes, lots of concrete trucks, engineers with hard hats and clipboards, and we're all going, I would never invest in this, because are you insane? It's like, we're like, how many here on this call know projects that are always on time and on cost? It's like that's like finding the tooth fairy, right? Now, and so we didn't want to be in that kind of space. Instead, I said, well, what's the opposite of that space? The opposite of that space is that you fit whatever it is that you're doing, whether it's a water purification machine, a waste to energy device, whatever, doesn't matter what it does, but you fit it into a 20-footer or a 40-footer. And basically, this means that therefore you can manufacture it. We're not going on site and assembling all these bits and pieces. No, it's a standard manufacturing, just like manufacturing cars or manufacturing something else, except a lot simpler. And what that means is that when you go to deploy these devices on the ground or in the ground, basically it's just a series of trucks or planes, whichever way they come, helicopters, and you just click them in like Lego bricks and you connect the hoses and the pipes and you turn on, push the green button and you're done. And why that is such an important from economic perspective is simply because when I speak to traditional infrastructure investors, say, "Oh, okay, so you're looking for this project here, you're looking for some funding and whatever." What the first question everyone asks is, "Well, what is the time until they start making revenue?" And they're expecting an answer along the lines of 2-3 years. And we say, "Oh, a couple of months, maybe 8 weeks, maybe 10 weeks," and they look at me going, like I've smoked something dangerous. I go, what? No, that's impossible. But the reality is that that's what you can do when you're dealing with modular and scalable. But the other side is the climate impact. I'm not a climate scientist, but I am an engineer, so I can add my two and two together. And you're looking at where we are in the evolution of greenhouse gas emissions, methane, CO2, all sorts of other funky things. And I'm not going to get into a deep debate around the goodness and the badness of all these kind of things. But if we take it as part of what we're doing with our efforts, is actually turning this curve around. Well, if we're going to build big projects with hard hats and cranes and concrete trucks, we'll never get there. I mean, someone who's a good friend of mine who's also part of our broader team here in Australia works in large infrastructure. He's been working in the infrastructure sector for 10, 15 years. And they've just got approval for one of the largest, stored hydro systems in Australia. It will store 1/3 of the entire energy need for the state of Queensland on a daily basis, daily rotating basis. It's taken them, I think, 5 years to get to here. We haven't dug a single spade into the ground yet. It's going to take another 3 years to just do all the construction and pour all the concrete. That's 8 years. And I look at that and go, well, that's fantastic. They're doing it. It will be an amazing project, but that's not what we're in. We're looking at things that we can deploy much more quickly. So I think, I'm not sure if I really answered the question, Marisa, but it's like, I think that's really the impact. And I would love to get some questions from any and all of you. I know several of you are sitting there with camera off, but please join us and come in and let's open up the floor, because this is essential to not just what we do, but essential to how we can actually turn infrastructure in the climate space to something that is both an economic locomotive, but also actually has a real impact. Anyone?
Thank you.
Michael, I have another quick question. Sorry for dominating the Q&A, but
No, I appreciate it.
You mentioned the 40-foot containers, the modular, scalable infrastructure type of technologies. Is this primarily for emerging markets or developed markets, right? So if you think about modular containers, I'm thinking about West Africa or some other emerging area where that makes sense, right? But if I think about if you want to do a modular infrastructure project in Nigeria, how would you do that lookalike project in the US, let's say?
Same way.
Is there a place or space for that?
Yeah, we would do it the same way. I mean, the 40-foot container is in a sense a metaphor that we don't have to have the physical container that could be sitting on a skid. But the reality is that, you gotta get to a situation where you just stack up these machines, whatever the kind of machines are. And the reason for that is also reliability. If you've got a single monolithic plant that took you 3 or 4 years to build, and if you've got a major structural failure somewhere in the middle of it, you shut down the whole plant. with our way of doing it, well, you shut down one of say 1,000 machines. Okay, well, it's 0.1% impact on production tomorrow. Well, so what? You can barely feel it. And so it's also about creating reliability. And I know that the reason a lot of the infrastructure projects in the olden days were very large is that that was the only way you could get what they call economy of scale. The economy of scale is broken. And it's broken in the sense that the new technologies don't obey the same rules. It just doesn't, because it's based on different thermodynamics. It's based on different physics than the old systems. And so therefore, like say, if you're building an ammonia plant with Haber-Bosch technology, yes, the bigger the better. I'll be the first person to say that. If you're building a ammonia plant with the new technologies for green ammonia, well, you actually get like the performance improvement you get from a 100 kilo a day machine to a 10 ton a day machine is in a single digit percentages. And I mean, lowest end. And so therefore you're not really gaining anything. And because the capex also scales linearly, as I said, the 40-footer is a metaphor. You don't necessarily want to stack physical containers, but you would still want to stack the equipment. And basically it's skid mounted. And it means that from a deployment perspective, you can hire the local plumber to connect all this equipment. You don't need 16 engineers that are wondering how they're going to turn the light bulb on.
Yeah. Okay.
Does that make sense?
Yes. Thank you.
Cool.
I would add one quick thing that I've noticed too, and that the way that Mike is explaining how we would do it, the assets that are producing the clean energy are then closer to the ground to where they're needed. So for the US, you wouldn't have to like find some gigantic place in Texas that you could build on 1,000 acres. You could have projects in all 50 states, closer to where the need is for depending on what the tech is that we're deploying. So whether it's a developing country or developed country, I still think this process is a little bit of a game changer in the way that these things can come online quickly and add impact, very,
Mm.
very.
Okay.
Anyone else that want to venture a question, please don't be afraid to step out. Okay, Maria.
Before you think about your questions, I will ask my question.
Cool.
And me and Mike are dominating this Q&A session, which I love. So just to continue on what we were just explaining about this new wave of technologies, and Mark, maybe I can direct this to you. We see the technology is mature enough. We've found very interesting solutions for this modular scalable infrastructure. What do you see in capital availability side of it? As Mike mentioned, the US, things have changed globally. It's still different. So can you talk about a little bit on what is, from this perspective, like what has been broken, quote unquote, in traditional infrastructure finance when it comes to climate tech, and how this can be changed with climatic model, because it is different model in terms of financing and investment opportunity. And let's explore what is the current model and what is different with climatic.
Yeah, I think that this is what's incredibly exciting about this model and this infrastructure as a service platform that we've created. When we first got engaged with Mike and Climatic, there was some statistics out there of just huge demand for these, and wanting companies and entities and municipalities that want to put these green technologies into place and deploy them, but no, they didn't have the budget to do it, right? And so there's this huge gap between the demand for these projects, and in some cases putting in very important goals to hit by within the decade or whatever it may be. We've heard many of those things, but I think that the key here was just money, It really came down to money, and so the capital wasn't there to deploy these projects from a budget standpoint at each of these municipalities or governments or whatever. And so with the what's elegant about the climatic solution is that we're an all-in-one solution from funding to deployment to even managing projects ongoing. And so when we can walk into a municipality and frankly, and Mike and I have laughed about this. You know, he thought for sure when we entered into this would be more for companies and things like that versus governments. And why would we want to deal with governments? It's going to take forever and red tape and all that. And it's been proven just incorrect. And I think one of the biggest pieces to this is budget. And so when we can walk into a municipality and or a government and offer a solution that they're looking for and finance and have all the financing ready and structure this as a lease model, it just eliminates a lot of that friction point around just flat out financing, right? And so this all-in-one solution really becomes kind of a no-brainer for a lot of these entities where they're looking to put these type of solutions into place. But even more exciting is you're not giving up, right? We talked about this in the front end about climate technologies 3, 4, 5 years ago. You had to sort of give up something to, well, you wanted to do something good for the planet from a climate standpoint, but yet you didn't have the efficiency of some of the more traditional solutions, right? Now it's turned itself on its head where in some cases 20, 30, 40% better results or efficiency that come from these solutions, and we can take care of all the financing. It's really just become in some cases kind of a no-brainer for a lot of these governments. So it's just incredibly exciting for us. And then from the standpoint of capital on the other end, in terms of finding that capital to finance these projects, we're just not finding it. We're not finding it to be a problem at all. We've got sources in. We're about to unlock 150 million in the U.S. through. There's lots of these family offices that are looking to deploy capital and debt vehicles for these green climate-oriented projects, and plenty of capital around the world that's looking to. And this is beyond traditional banks, right? So there's just lots of solutions out there looking to deploy capital for these types of projects. And then there's a whole nother, we could spend a half hour around green bonds and the opportunity there. And once that avenue opens up for us in the near future, I don't want to say endless money, but we can give you examples of projects that were 10, 15 times over allocated, or the demand was 15 times what the allocation was for the bond issuance. So we're just incredibly excited there. And the key also from a debt standpoint is we've added another layer onto this, and maybe this is for a little bit further down our program today, but part of our solution is to in securing debt is to have an insurance wrapper around that to just take that much step further for the project, and to get those assets deployed. So it's kind of in many cases not a no-brainer for these lenders, but it just makes the process much easier.
So, Mark, what's the unlock there then? Just the off-taker and the PPA? You know what I mean? Would it just be sort of the off-taker and the PPA behind that? That would be sort of the only thing you would need. I'm thinking about, the project in North Africa or West Africa in general. What would be the
Yep.
unlock, the solution?
Well, I think the unlock is, as you say, it's literally like, say it's an energy project. Yes, it is just a PPA. And I think to add a bit more flavor to that, if you're dealing with a large project, you're seeking either a sovereign guarantee or you're seeking a guarantee via the World Bank, depending on which country you were in. And basically with that, it's all systems go. And to put a bit of kind of color on this, I know some of this maybe sounds a bit abstract, but right now we are in project negotiations across UK, Poland, Germany, Egypt, India, Solomons, Fiji, Vanuatu, Australia. Like it's it's literally when I say all over the world, it's all over the world. And if any one of you on this call can say, "Oh, there's a pattern," I would love to understand what a pattern is because we haven't figured it out yet, right? It's literally these are coming at us from all angles. And I mean, a lot of these calls literally come because we got someone saying the shareholder circle is like, oh, no, no, I know someone in Poland. I'm Polish, right? Okay, well, who do you know? Oh, I actually know the CEO of so and so. Like, okay, that's pretty high up. Let's jump on a call, right? And it's a good example of why this small solution works. They basically said very directly to us, don't think about a gigawatt project to begin with. It's not gonna fly. People have been burned too many times. But if you can do something in a 50 to 100 megawatt, yes, the world's yours. So we can do 20, and 20 times 100 is still 2 gigawatts. So I don't really care. But because we got that scalability, modularity, it's it's the same. It's actually easier because we can just take them one at a time and have different project teams and so on. But yeah, it's a very wide space. Sorry, I'm not trying to steal your thunder, Mike.
No, thank you.
Cool.
Uh, Mike, I would ask maybe it makes sense for us to explore now a little bit more about risk because this came up as a almost like a follow-up thing. Like, what, where does the real risk sit? Like, do we have, I don't know, technology risk, policy risk, capital structure? Where do you see from investors' perspective? Maybe Mark can also elaborate on that. But Michael, maybe we can start and then from investor perspective, we could say if the offtake agreements take some of these risks away or not.
Yes. So I guess the first risk is you're building a large infrastructure deployment of some sort. You got to make sure there's an off-taker coming along. And I mean, we can take as an example ammonia in Australia. And I mean, before we could get to the other end of the spelling of the word ammonia, we had people that literally had meetings with us and said, well, we like to buy some of that. And one of them I was silly enough to ask the question, how much? And they said, how much can you deliver? And I was like stunned because like, what do you mean that's a weird thing to say? You're a large industrial company, like $1 billion kind of company. And they basically said, we have had a green mandate at the board level. We need to shift all our supply chain from what we're currently doing to green in the next, I can't remember the number of years, but 3, 4, 5 years. And if you can help us, then good. Well, let's do business. It's so that there is obviously a risk in the sense that you build infrastructure that you are supplying to no one, and that's definitely not the space we want to get caught in. And I'll give you one more example. Just last night, I was on a call with the UK. We're looking to take over some technology, and with that, a bunch of projects that are in the energy generation space. And these projects are a result of a what do you call it? Government auction for contracts for difference in the energy space. And so we've obviously been querying, okay, well, what's the security of these, and does you have somebody bought the other side of these contracts? Otherwise, they're sort of a bit of a moot point. And what we learned a couple of weeks ago was that yes, they're all being sold to the majors, to Centrica, to Octopus Energy, to British Gas, large organizations like that with a triple B credit rating or A minus or whatever they are. And so the next thing was, well, what's the government want to do? Well, the government just want to see, well, we have lucky to have some people on the inside that know us and we know them, and basically well, we just want to make sure that this thing actually works. Like as a government, you don't want to have a policy failure. So there is a lot of mechanisms around to eliminate or to minimize the risk of does this work as a commercial venture. I think then the next biggest thing to be aware of is that this technology, it's hardware, it sits on the ground, it could fail. Let's just call a spade a spade. Just like you buy a car, sometimes they give up the ghost and just want to drive. It's the same thing. And in this context, the first line of defense is there's a warranty on most kinds of equipment, including this kind of stuff. So you go back to the manufacturer and say, well, this thing doesn't work. We bought, 1,000 of them, 3 of them don't work. Do something, and they probably just give you a new one. But let's say now that was 5 years ago, and in the meantime, they've fallen in hard times and they're no longer in business. So we have an insurance policy that we're taking out on this, so that basically we can go back and claim on the insurance and say, well, machine number 3 just fell over, and what are you going to do about it? And we can claim that insurance. So that when Mark said earlier, there's an insurance wrapper as part of our solution, it's because we don't think we want to sit with that residual risk. We want to make sure that basically, yes, there's obviously a cost to buying the insurance, but it's a known cost as opposed to an unknown how much it's going to take to replace this kind of equipment, and that's not the business we're in. In the last significant risk is probably around, shall we call it, political risk. So as I think I said already, we're dealing with countries that from the top end of the GDP per capita ranking and from the bottom end of the GDP per capita ranking. And, you could have a coup, you could have an uprising, you could have all of these kind of things. It happens. It's not because they're bad people, it's just because they're disagreeing on what's going on. And so there are lovely things like MIGA, which is a World Bank program that basically is like an insurance platform for political risk for, shall we call it, unstable countries. Trying to be polite about it here. And you just factor it into the cost of the funding and finance. It's just part of what you do. And obviously, if you're selling a project into, say, France or UK or something, you probably don't really need insurance for political risk. So therefore, the cost of funding, the net cost of funding to some of these countries is cheaper. That's sad, but that's true. That's the way it works.
I'll add one thing on the political side. Because of the way this is set up, and because we're not looking for subsidies, we're not looking for grants, we're putting projects together that are going to benefit the governments. In my experience dealing with governments, when you're going to them saying, here's what we want to do, they say, what's it going to cost me? And you say nothing. And what's it going to get me? And you say, well, it's going to move your needle on green energy. It's going to be a lot smoother sailing than other, public affairs projects. And the early conversations indicate that, these potential projects that we get going are, I'm not as concerned about all the government approvals that I would be if we were asking for something from them or rolling the dice on something more, risky.
Thank you, Todd. Questions on this? It was a juicy subject,
It's a long
I
one.
think. Yeah. Um,
Chad,
also,
John, a couple of people we haven't heard from. Anything from you guys? Tiffany?
um, if anyone wants, again, just will repeat myself because I know some people joined us later that we are happy to take one-on-one exploratory calls after this if anyone wants to learn more about on even more intimate setting on the calls with us, but feel free to ask questions here as well. But Todd, maybe we can talk a little more even about the government and policy and demand side of it. Uh, from your experience and from talking with this client so far, what do you see as a driving force behind it? As we mentioned climate goals, we mentioned energy security, which is a very big thing for island nations, right? And we've seen cost pressure, we've seen in general geopolitical resilience, which is such a big subject now because of all this geopolitical volatility that's happening around the world. What do you see as a number one driver?
Look, I think the biggest driver is that every sovereign nation has an issue of mounting trash and waste. They have an issue of grids that are breaking down or are old or reliant on old technologies. And they see working on a project with us as a way to, really level up their game on both independence, on circularity, on all. It's like a win-win-win to do one of these projects because of the fact that the technology is amazing, as it's modular, so it's not going to be 10 years before they see the benefit. And in a very short period of time, they're going to be able to cut their emission numbers down greatly and have, in many cases, some of these technologies are a closed loop system where you put all your trash in and you get energy out. You're solving two problems in this with the same solution. So that's where I see the excitement about whether it's a big country or small country. I mean, there's certainly a really huge allure to these island nations that are totally dependent on others, but even other countries are dependent. Look at what's happening with the Ukraine situation and oil from Russia. I mean, there's all sorts of things happening that would make any country want to look at things like this to gain independence and to solve some of the problems that they haven't been able to solve so far in this space.
Right. Um, Mike, do you want to add a little bit more about where we are in terms of traction, for everyone to know where Climatic stands now and what we are looking for in near future, before we wrap this webinar up?
Sure. I mean, from a debt funding perspective, we are in DD phase with the first lot of debt, which is $150 million parcel, which is coming out of the US. We've already pre-approved for the next 125 that's coming out of Singapore. We need to go into the final stage of that, but we didn't want to do both things at the same time. We want to make sure we do everything properly and conscientiously. We Beyond that, we already got the next one after that again, for 500 million. So on the debt funding, we sort of scratched the surface of it, and we realized we're now doing it from the fire hose, which was like a pleasant surprise, but it's also like, oops, there's some what do you call it, responsibilities that obviously come with that. On the project front, as I said before, we expect to have contracts in place within a fortnight with an island in Northern Europe. We expect to have contracts in place within 6 to 8 weeks for a big ammonia project with off-takers here in Australia. We have probably another 5 or 6 projects in the pipeline, manure processing in Malaysia, ammonia production in North Africa, ammonia in India, garbage processing in the Pacific Islands. There's a handful of Pacific Islands that are sort of moving closer, and we are looking to establish essentially a center of excellence in one of them, and we are negotiating with what I think I would respectfully call tribal elders and tribal leaders in some of these nations, because at the end of the day, yes, there's a political system democratically elected, but in many of these countries, it is still the people in the villages, in the tribes, that actually make the real decisions and make sure things actually happen. So we're active on all of these kind of levels. The funny thing is that, let's say the ammonia project that's here in Australia, like stage one of that gives us $20 million a year worth of revenue. That's just stage one. And stage one is 1/10 of the whole thing. So you can do the maths in your head. These things are big. But there's still laws of physics you can't deploy. Well, you can, but it's very hard to deploy thousands of machines and hundreds of thousands of solar panels in a week. It takes many months. It takes several years to do that properly. And so therefore we have agreed with our deployment partners to do this in a piecemeal manner. But once you get started, like again, some of these things, the demand has come ahead of we have not done any kind of marketing yet at all, like zero. and which sounds bizarre. You're probably going, what? How is that even possible? I mean, these projects have come to us, like literally. Sometimes the phone rings, sometimes you just get an email from somebody. Sometimes it's like, as I say, with Poland, is like my Polish friend that is one of the extended circle of people around one of the technologies. He said, "Oh, I know someone very high up." It's like, okay, you jump on a call and they're just going, "Can you please get us something to us?" And you just take it step by step by step. We're finding that probably there's a 6 to 12 months kind of cycle from when you have the first hello until you're ready to do something. This is still infrastructure. Well, we shouldn't expect to do this overnight because we're not just selling a car. We're selling something that'll impact their society and their country and their territory for decades to come.
Right. And Mark, I think you were saying something. I think it will be helpful to talk about investment, like vehicle side of it, so that we see what are the actual potentials for
Yep.
investors to invest in us.
Yep, I was just gonna bring that up. I think what's interesting, if everybody hasn't picked up on it, from my perspective, being involved with traditional companies, traditional tech companies, or other companies, to this point in my 30-year career, this is a unique one from the standpoint of it's almost been engineered in reverse, right? Normally, you go out and raise capital for a company, and then that then allows you to go hire people and go find customers and find other solutions, whatever it may be, to get that revenue driving. We've almost done it the other way. Well, we have done it the other way, where we've built an incredibly big funnel. We have the debt financing to back those projects, and now we are going out to the public, and just starting to have discussions around raising equity capital, from the standpoint of to not only continue to staff up and build our team out globally, but obviously there are legal costs that are involved with getting these projects off the ground. And then part of that equity capital is also for those insurance wrappers that we talked about. So to put some fine points on this, we'll be raising $25 million. It'll come in tranches. The first tranche is $1 million or $2 million. And we think at a pretty attractive valuation for initial investors. I will tell you that we've had already a number of interested bigger checks that are looking to come in, that we're in deep discussions with, or further discussions with. We just got a verbal yesterday from a strategic that is looking to not only do some work with us, but also commit $2 million in capital. And so we think we'll continue to have those discussions with large family offices and others that will look to put bigger dollars in. But we also have some room here in the front as we get this going to bring in some friends and family and smaller checks into the company, and then we'll be off to the races. But I think it's worth noting that this hasn't been the traditional path, I think, that most companies would take in terms of when and how they raise capital. We've essentially stacked the decks, and now we're raising the capital off of that. So it's pretty exciting for us. And maybe another point you were probably asking as a fine point is this is for straight equity in the company. And our goal, as from an investor standpoint, is to distribute yield after the first year, after the first 12 months. In year 2, look to distribute dividends to our shareholders, and we're targeting 20-ish% return yields. Obviously, there's no guarantee. Some of our projects will be lower, some higher, but that's based on our models. That's kind of where we're targeting, and some pretty impressive returns, I think, as we look out over the next decade for our shareholders. In addition to that, and this may even be for another call, is we're finding some really interesting opportunities where, with these technology solutions, we have the opportunity to actually take controlling interest in the company, and so it's almost like a private equity layer that comes off of this. That can be the numbers are just astounding of some of these things that we've come across, and They're just in need of more operations support, an operator to come in and take the company. Many of these technologies have come out of universities and educational institutions, and we have just an incredible opportunity to come in and take a controlling interest in the company, and that just makes the economics even that more astounding, frankly, from some of the talks that Mike and I have had around a few of these technologies. Mike, I don't know if you want to add anything more to that.
Well, I'm just to add that I'm not trying to boast, but that's the reason I was up till 10:30 last night, because literally we have been offered another company that we've had our eyes on for 6 months. We've had a number of conversations, and well, they're now ready to transact, and we're ready to transact as well. And the reality, the thing I want to add, which is the fun fact, so to speak, is traditionally when you have these technology companies, they go through a Series A and a Series B and a Series C, and we can continue to the end of the alphabet. Because we as Climatic basically provide the debt funding for basically boosting their revenue and essentially funding their revenue growth, they don't need to raise a continuing series of A, B, C's, and D's, because there's no need. We basically said, well, when you got the ready, we'll buy the technology off you at guaranteed prices, and we'll take the credit risk with the client, which is why also that we only deal with clients that are triple B or A and upwards, right? And when founders in these tech companies sort of get that one and they sink in, they're going, ooh, well, that's interesting. So no dilution. And well, Climatic's the same. It's like, we're going to raise capital as we do right now in the next couple of months. But once we've done that, I can't figure out why we need to go back to the market again, because when you got the dead uncle that just keep pouring cash in, and you can leverage that. You can basically make it with revenue, which is a nicer way to live.
Yep.
Thank you.
Any questions? Scott, you've been on the screen for a while, Scott. If you got any questions, just please jump in.
No, I'm just taking it all in. I'm just looking at it from a marketing perspective in terms of what you said you've done no marketing. So I guess my question is, who will first need marketing to? Investors, municipalities, countries, who first needs to know about your company and what you're doing
That's
from
yeah.
a marketing communications perspective?
That's a very good question. I think the who goes first is probably the off takers, and I'm sort of going a little bit tentative into this, but if you think about it from the number of engagements that we need to do there, we can go to a single debt funder, and the next one could be $500 million. But in order to fulfill the order volume that needs to fit in, then we may need, say, 10 off takers. So therefore, just by the sort of laws of numbers, we need more off takers than we need funders in that context. So maybe the answer is we the first broad segment of people that need to know about what we do are those that actually want to buy the output of these machines and out of these systems.
Right. So your customers, your actual
Yes.
customers.
Yeah.
Yeah. Okay.
Good question. I hadn't thought about it. It's a very, very pertinent question. Yes, thank you.
Well, and I'll add that I think that I totally agree with what you just said. And one of the things that we need before we can do that is we need one or two of these projects to come to fruition, and then it's going to be very much easier to market to potential
Sure.
off-takers, because we got something happening and on the ground and working, and we can show it to them. And right now, we've got a lot of great stuff, but we can't say, oh, let's all get on a plane and go see this in operation in this site, because we don't have it yet, but we will soon.
Mm-hmm.
It's very close.
Cool. Marina?
Okay.
Yeah, just wanted to give the audience the last final chance to ask questions. Otherwise, if Mike, Mark, Todd, you want to add anything else to today's webinar, otherwise, I think we will be ready to wrap this up. But just
Yep.
final call for questions if anyone wants to ask. But just also a little bit of technical items is that I will be following up with you with the with an email with notes from today's call, and hopefully we'll have a recording for you to refer to if you need to go back and listen to any of it again. Um, but yeah, again, happy to take this conversation further with any of you or all of you. Please let me know if you have any questions. Otherwise, this was very interesting webinar, and thank you for your time, Mike, Mark, and Todd.
Thank
Yeah, and
you.
I'll just
Thanks for
add,
everybody for
just
coming
in,
here today. Sorry, Mark.
yeah, just in closing, I'm sorry, I was just going to say, just in closing, first of all, thank you for everybody for attending out of your busy day. We're just really excited about what we're doing here and what Mike's vision is coming to fruition, and being part of that. From an investment standpoint, it's just and maybe some of this is living in San Francisco and the part of the world where everything's about tech. This just adds a really interesting solution, I think, for investors, and an uncorrelated asset class to the traditional investments you may have, and it also targeting pretty high yields, and it just brings something a little bit different to a portfolio as you think about it from an investment standpoint. So we appreciate your consideration for this, and being part of this journey with us.
Thank you guys for showing up. We appreciate it.
Thank you very much. Speak to you soon.
Thank you, guys.
Thank you all.
Thank
Have a
you.
good night.
Guys.
Thanks, guys.
As